Hello friends, welcome to Shashi Agarwal Economics and Law classes. Today our topic is very important, that is the function of central bank, or we could say what are the function of Reserve Bank of India. This topic is very important for the student who are preparing for the competitive exam, the student of financial institution and markets, macroeconomics, banking and insurance, money and banking. If you find my video useful, please do like it, share it, and also subscribe my channel Shashi Agarwal Economics and Law Classes. First of all, we will understand what is central bank. A central bank is a public institution that is responsible for implementing monetary policy, managing the currency of country or group of country, and controlling the money supply in the economy. Reserve Bank of India is the central bank of India. It occupies a very important place in Indian banking and financial system. It is an apex institution. It controls the Indian banking and the financial system. It acts as a guide. It advises, regulates, controls, promoter and developer of the financial system. It is owned by the Ministry of Finance, Government of India. It is the highest monetary authority of India. It was established on 1st April 1930 by the Reserve Bank of India Act 1934. It was initially established in Calcutta, but later on it moved to Mumbai in 1937. It was private owned initially, but it was nationalized in 1949. It was set up in April 1935 with a authorized share capital of 5 crore, divided into share of rupees 100, each fully paid up. The entire share capital was in the beginning owned by the private shareholder. It was nationalized in 1949. The general supervision and direction is given to the Central Board of Directors. It is a statutory body. It is responsible for printing of the currency notes and managing the supply of money in the Indian economy. It regulates the commercial banks and non-banking financial companies. It's headquartered in Mumbai. Governor present is Shakti Kanta Das. Reserve is US dollar 623.200 billion. It also promotes financial inclusion and leading member of Alliance for Financial Inclusion. It is also referred as a mid-straight, is also referred as a banker's bank and the lender of the last resort. The working of RBI is in the hands of Central Board of Directors, which consists of 21 members. One is governor, four deputy governor, out of which two financial ministry representative, usually economic affairs secretary and financial service secretary. 10 directors, which are nominated by the Government of India to give representation to important element in the economic life of the country. Four directors nominated by the central government to represent the four local boards headquartered Mumbai, Calcutta, Chennai and New Delhi. Each of these local boards consists of 5 members who represents regional interest, the interest of cooperative and indigenous banks. So the governor is the main. There are four deputy directors. Under four deputy directors, executive director, under executive director, principal chief general manager, under principal chief general manager, general manager, deputy general manager, assistant general manager, manager, assistant manager. Then there is a sports staff. Now we will understand what are the functions of the Central Bank of India, or we could say what are the functions of the Reserve Bank of India. Monetary function, supervisory function, promotional function. Bank of issue. Section 22 of the RB Act, the sole right to issue bank notes of all denomination, of all values, they are given to the Reserve Bank of India, except 1 rupee note and coin and small coins. They are given to the Ministry of Finance. It has a separate issue department. Its asset and liability are kept separate from those of the banking department. Before 1956, The principle of note issue of Reserve Bank of India was based on proportional reserve system, but after 57 is required to maintain gold and foreign reserve of rupees 200 crore, out of which 115 crore should be in gold and rest 85 crore should be in foreign securities. It also acts as a banker to the government. It acts as a banker to the government of India and the state government. It transacts all banking business of the government, accept and pay money on behalf of the government. It carries out exchange remittance and other banking operation on the behalf of the government. It also provides short-term credit to the government of India through sale of treasury bills. It also provides ways and means of advance which is repayable with 90 days to the state government. Central government is empowered to borrow as much as it can from the Reserve Bank of India. It also acts as a government agent of the government in respect of the membership of International Monetary Fund and the World Bank. It also act as a bankers bank. All other scheduled banks are required to have accounts with central bank and to keep with a certain percentage of their deposit with the Reserve Bank of India. It is also known as a custodian of the banking reserve of the country. It also acts as a lender of the last resort, lends money to the banks by rediscounting bill of exchange and approved commercial securities. So it is the lender of the last resort. It is called the lender of the last resort. Normally, banks are expected to meet the requirement from sources other than Reserve Bank of India when they are not able to get the financial accommodation. In the end, the Reserve Bank of India is the lender of the last resort. It is one of the most significant functions of the central bank. It helps in protecting the financial structure of the economy from collapsing. It provides loan against securities, treasury bills, and also by rediscounting bills. It also acts as the advisor of the government, not only in the banking and financial matters, but also on a wide range of economic issues, financing patterns, how the resources they should be mobilized, how the institutional arrangement should be regarding to the banking and credit matters, international finance. In addition to that, central bank is also instrumental in formulation of monetary and fiscal policy to regulate the money market and controlling the inflation. And it is also controller of credit. It holds the cash reserve of all the scheduled banks. It also controls the credit creation by the bank. It controls the credit operation of bank through quantitative and qualitative control. The most extensively used credit instrument is the bank rate. It controls the banking system through the system of licensing. It also acts as a lender of the last resort by providing the rediscounting facility. It also protects the depository's interest to need to keep a check on the function of the commercial bank in order to protect the interest of the depositor who deposit money with the commercial banks. It is also custodian of foreign exchange reserve. The Reserve Bank of India has the responsibility to maintain the official rate of exchange and also with all other member countries of International Monetary Fund. It also acts as the custodian of India's reserve of international currency, responsible of administering the exchange control of the country. It also frames the policy in maintaining the external value of the rupee. The external stability of the currency is related to the internal stability in the economy. Domestic fiscal monetary policy, they have an important role in maintaining the external value of the currency. It is also custodian of foreign exchange reserve. It maintains a minimum balance of foreign currency reserve with itself. It has the authority to enter into foreign exchange transaction both on its own and on behalf of the government. Central clearance and account settlement. It also acts as a clearing house. Since commercial banks they have their surplus cash reserve deposited in the RBI, it acts as a clearing house of the commercial banks and helps in settling of mutual indebtedness of the commercial banks. So it has become very essential function because it is very easy. easier to deal with each other and settle the claim each on other through big bookkeeping entries in the books of the Reserve Bank of India. So it is very easy for bank to settle the mutual indebtedness through the Reserve Bank of India. So these are the miscellaneous functions. It collects, collates and publish all monetary and banking data regularly in weekly statement in the RBI bulletin, monthly in the report on currency and finance, and there is an annual report also. In July 6, 2005, a new department named Financial Market Department in RBI was constituted for surveillance on the financial market. It will separate the activity of debt management and monetary operation in future, perform the duties of developing and monitoring the instrument of the money market, also monitor the government security and the foreign money market. Supervisory function. It also have non-monetary function of the nature of supervision, so that sound banking system should be promoted in Indian economy. The Reserve Bank of India Act 1934 and Banking Regulation 1949 has given wide powers to the RBI for supervision and having the control over commercial and cooperative banks. The RBI is authorized to carry out a regular inspection on periodical inspection, and the banks have to deposit their return and necessary information on the regular interval. It has the authority to grant license to banks. It can also ask bank to submit their periodical information. It also have control over non-banking financial institution and right to issue directive to non-banking finance companies. It also implement the deposit insurance scheme, set up deposit insurance guarantee corporation in order to protect the deposit of the small depositors, sorry. Promotional function. It was asked to promote banking habits, extends banking facility to the rural, semi-urban area, establish and promote new specialized financing agencies, establishment of IFCI and SFC, Deposit Insurance Corporation, Unit Trust of India, Agriculture Refinance Corporation in India, Industrial Refinance Corporation of India. It also works as a development agency by developing various sister organizations like Agriculture Refinance and Development Corporation, Industrial Development Bank of India. It also, which render Agriculture Refinance Development Corporation, render these institutions provide agriculture credit and industrial credit in the country. In 82, NABARD was established, has taken over the entire responsibility of ARDC, deals with the agriculture credit, and it also tried to encourage the facility by providing finance for foreign trade and also provide finance for exporting from India. Exim Bank and Export Credit Guarantee Corporation are supported by refinancing their lending for export purpose.